So here we are in Mill Valley with Bill Seaborg at RPM Mortgage. Bill's been in the industry for 20 years as an industry veteran and has done many, many mortgages with me and for me. So we're just going to tell you a little bit about navigating the sometimes thought of as maze of buying a mortgage. Bill.
Well, I think a common mistake that buyers make is they go looking for houses in the $1.5 million range, and then when it comes down to it they find out they only qualify for $1 million home. So it's a huge waste of time for the buyers and the realtor involved. So the process involves getting their tax returns, their pay stubs, their bank statements, and from that we can derive a realistic loan amount and down payment, and then they can, shop in a more realistic manner.
So after they've given all the paperwork to you and they've gathered everything they need from their accountant or out of their safety deposit box or wherever they keep it, how long does it take between the time you have the paperwork and them finding out how much they can afford to spend?
Pretty much underwrite the loan myself, in the sense that I could probably give them an approximation within 24 hours. So it's not that difficult.
So I've never owned a home before, and I've read in the newspaper there are many different kinds of mortgages that are available to me. Why would I choose to buy a fixed rate mortgage over an adjustable mortgage, a 30-year mortgage over a 15-year mortgage, and why do I need to use a mortgage broker and not just go to my local bank manager?
Mortgage broker has access to typically 30 or 40 different lenders, whereas a specific bank, of course, has a limited range of products. So that would be the basic reason why you would want to use a mortgage broker. In terms of product, 30-year fixed rates are at historic lows. Typically you can get a 30-year loan in the low to mid 4% range. But if you think that you're going to be moving out of this house, either transferring or you're going to start a family and need to buy a bigger house within a short time frame, you can get a 5-year fixed at 3.625% right now. So that represents a dramatic monthly savings over the 30-year fixed, but of course you don't have the insurance of being fixed for a lengthy period of time. So that's the trade-off.
So I've decided that I'm going to buy a 5-year fixed, and normally when you see these written about and talked about in the paper, there's a backslash and a 1 next to the 5. What exactly does that mean, and what happens after 5 years?
Good question, Julie. After 5 years, there's an annual adjustment. All of these loans have a life cap, which is usually 5% above the start rate. So in the case of that other product I alluded to, that life cap would be 9.625. Oops, 8.625. But it wouldn't go to that immediately after the 5 years. So there's a margin plus index. It gets rather complicated, but the rate can go up incrementally. So buyers have to be made aware of that. And again, that's one of the trade-offs.
So we found a house that we love, and we're trying to figure out how much it's going to cost for us to own it, pay the mortgage every month, and what's going to happen when we get to the closing table. So can you explain to us a little bit about what the hidden costs are, what the one-time costs are, how much our insurance is going to be, whether we have to buy mortgage insurance, and exactly what our nut's going to be every month?
Typically with, for example, a $500,000 purchase price, the buyers would be putting 20% down, at least ideally, at least 20% down. So that translates into a $100,000 down payment. In addition to that, there'll of course be title and escrow fees. There's prepaid hazard insurance premiums, prepaid taxes, appraisal fees, some lender fees. There may or may not be points associated with the loan. So on a purchase in the amount of $500,000 purchase price, you could be looking at anywhere from $5,000 to $12,000 in not hidden fees, but fees. And typically what I do is I go to the title company and get an exact figure in advance of when you tender the offer, or when the buyer tenders the offer, so that they're aware of how much over and above the actual down payment they have to provide at closing.
So it's a very loaded question, Bill, but is this a good time to buy a house?
I would say for first-time homebuyers, it's a terrific time to buy a house. Rates are at historic lows. Prices are at extremely low prices, lower than we've seen in the last few years. So as long as the buyers are qualified, because the banks, the lenders are much more strict. You have to have good credit. You need to have 20% down. You need to have good income. But if you have those factors, it's a terrific time to be buying.
So I hope that has helped to answer many of your questions on navigating the maze of buying a house and how to deal with a mortgage. Thank you, Bill Seaborg from RPM Mortgage in Mill Valley. Bill is on our preferred mortgage list on our website, so you can contact him at your leisure. He is always available to answer questions, and as I say, is one of the people that we've worked with mostly over the last 15 years. Thanks very much, Bill.